Hey guys, we're all reading the same things in the paper, right? Housing prices are dead. They've completely flatlined. In Toronto, they're going down by 25%. In Windsor, they flatlined, right? The market is done. No, it's not. This is a perfect time to create cash flow and equity, specifically in Windsor's market. I'm Rhys from the Vanguard Team at Manor Realty. With me is a man that can beat me up, Jason Balzden, my teammate. How you doing?
Good. How are you this morning?
Jason's a big man. He's a big man. You got to watch him. Don't get him angry, guys. Just make sure you do good sales. We are going to go into the market update today. I am showing so much professionalism out the gate, buddy. We're going to go into the market update, monthly market update for Windsor, Ontario. And then Jason is doing our house plus ADU strategy for Windsor. And if you go, what's an ADU? Basically, what Jason is specializing for in our team is value add properties. And the easiest, most profitable, safest value add strategies right now is to buy a house, you put a second unit into the basement, and you rent both of them out. And then you have the power and the ability to either sell that to somebody that wants a lot of cash flow off of something that resembles a duplex, but is technically a house within a mother-in-law suite. But at the same time, you can choose to hold on to it, refinance it, and repeat the process, something you guys will be familiar with as the BRRRR strategy, where you buy, you renovate, you rent out both units, you refinance the property, and then you repeat the process. This is what this is what Jason specializes in for us, also known as James, depending on how many drinks you've had. I'm on fine form today, man. Leave me alone.
You are. And the funny thing is, not too many times does my name get messed up, but when it does, it's always James.
Yeah, well, because isn't like James is a derivative of, is it not?
It may be. I don't know the history of the name, but
Yeah, I could swear it is. Hold on here. All right. So this is the monthly market update for Windsor, Essex, down in southwestern Ontario. Guys, you should be really paying attention if you love cash flow and you love making equity off of sort of minor turnaround projects, right? We are the Vanguard team from Manor Realty. We're top 100 teams in Canada most years. And we do what we do down in Windsor, Ontario. There's a heavy focus on income property sales. We really like making you guys wealthy, right? That's what we're good for. All right. As always, you can subscribe below both to our YouTube channel and to our Facebook investment group, which is also quite good for content. If you're really interested in investing down here, feel free to join us there. Here's your market update. And what you're going to notice is two things. One is month to month, there's not a lot of change. And that has been a running theme for about 18 months. What you'll also notice about halfway down is months of inventory, right? You're still creeping up. I've watched that number go from 6 to 7 to 8 to 9. And what it really comes down to is the uncertainty in the market, right, Jason?
absolutely.
So what we're finding is that there's a bit of herd mentality where there's tons of good deals on the market. And, people that are in the private sector, let's say you work tool and die at a factory. You're probably waiting right now to see what happens as far as a trade deal goes with the United States and Canada. And I would say, good on you. You probably should wait. I wouldn't be upscaling to a bigger house until your job's secure. What blows my mind, Jason, and I don't know if you're experiencing this as well. What blows my mind are the people that have job security.
Right.
Your city employees, your doctors, your lawyers, your professors, your school teachers. Are you finding the same thing? I find that they've got herd mentality,
Absolutely.
and because their buddies in the private sector are sitting, they're sitting. Is that right?
It's an interesting time. Yeah, the fear is definitely there. And like you said, people with secured employment, you dig a little deeper into that, and they honestly don't know why they're afraid. It's just there's so much uncertainty, right? So it's a perfect segue into your favorite Warren Buffett quote, right?
Oh, yes. Yes. Do you want to say it?
Be fearless when they are fearful. Be fearful when they are fearless, right?
Yes. One of the greatest rules you can understand as an investor.
So Warren Buffett says, now is the time.
If you want to get wealthy and you have chosen the correct path, which is real estate investment, 80% of the world's wealthy get wealthy through real estate investment, not from owning a business or crypto or any lottery, whatever. They are landlords. That's where you make your money. And most of those landlords, I'm telling you right now, are either really good at doing some value add work, which could be simply sprucing up some beat up units in the properties that they buy, and also buying when everybody else is freaking out. because that's when you get a lot of good deals. And Jason and I actually have a couple deals for you at the end of this video. So stick around. Probably should have mentioned that at the beginning, but that's okay. So let's go through this a little bit more. Days on market is hovering at about the same thing, which is about a month. But you're noticing there's a creep up in the months of inventory, which means a reduction in competition for the best properties for you to invest in. All right. As far as sales go, year to year, they're down about 5%. Right. So that means if we sold 20 properties last year in June, we're selling 19 properties this year in June. So it's not too bad. What you're finding too is the properties that are selling are cheaper properties. Market activity up 15%. It's up 15%, not because sales are up. Sales are down 5%. Doesn't make sense, right? But this is also tabulating the number of listings going up, right? So we're seeing a lot of inventory going up on the market. And again, this provides you guys, Jason, provides them
choices and opportunity for deals.
Choice.
Right.
Yeah, it provides them choice. Residential units sold, as always. I hate these two columns in the middle because they're actually bigger deviations than the others. But what it does tell us is the bulk of sales are between 420 and 700 grand. And you can see there's a huge drop off after that in our town, right? You guys are going to be heavily focused, I would probably think, between about 250,000, if you can see my mouse button at the 11, all the way up to about the 550 mark. So you can see that's a pretty robust market in there. There's not too many properties that Jason's going to recommend that are 550,000 or more, right? Like you're just not. If you're going to make a profit off of a turnaround, it's in this range here, basically E to 550. All right, and this is the last one we've got. I'm not a huge fan of talking about average house prices, but if you notice, we already talked about median sales price up here, which I think is a lot more accurate. Again, guys, median is just looking at what the middle house sold for. So 471 houses sold. What did the 235th house sell for? And it's 545,000, which actually is going up. It went up $10,000 over the month before. And this is what I mean. Like if you look at average, you can see that, we did creep up a little bit over last month. But if you look at average, look at this. You would think it's gone way up, right? From 556,000 to 582,000. You go, wow, that's huge. But that tells us is a few multimillionaires bought a couple of really big houses and it skewed the numbers up, right? That's why I like median, guys. But what this graph does show you is how flatlined the pricing really is over the last 2 years now. Look at that. I mean, take a ruler. It's a straight line, man.
Yeah.
So you're not coming to Windsor right now, and you never really were coming to Windsor for property appreciation, right? That was always Toronto and the big cities that were going up rapidly. And of course, now they're going through a big adjustment because they went up fast. Now they're going down fast, right? That's what happens. Canadian historical average. And this is what I recommend everybody relies on for property appreciation. Canadian historical average since 1867 is a straight line at 5% a year. And the global meltdown and the Great Depression are little divots on that line, and it goes right back up to the line after global meltdown's done, and it goes right back to 5%. So right now we've been flatlining for a couple of years, which means later on you'll see the line this line try to catch back up to the 5% a year. So there's going to be good property appreciation later if you're playing long game. But right now you're flatline, which means you should be chasing two things. One of them is equity. Right? So you're buying a place, you're adding a mother-in-law suite into the basement, and you're getting that nice big chunk of change, right? Like a 30 grand profit or whatever. And then the other thing you should be chasing, which is directly tied together, is cash flow, right? So Jason, why don't you, I'll flip to the next slide here and you can wax poetically because you know these properties better than I do. This is your wheelhouse. You found these properties and you can speak to everybody here.
Absolutely. Yeah. So this is a, nice little property in the central area of Windsor and coming in at just under 300,000 with the ability, the way the property is set up, higher basement, ability to put in a little bit of a separate entrance there and create a mother-in-law suite. We can get that value up to, after renovations, of course, close to 440, giving us a 42% return on our investment. This leaves us open to, like Rhys started with, the burst strategy. Pull our equity back out and keep rolling into another one.
Yeah. So when you're talking about a net profit over 30,000 at a time, you're able to rotate the vast majority of your money, if not all your money, property to property, right?
Right.
Depending on the properties, depending on sort of the rules of mortgages, which seem to change with the wind right now. um, we see people doing two strategies. One is they'll do this property, they'll turn it around, they'll rent out both units, they'll refinance, and what they'll find is sometimes they didn't get all their money back out. Some of their equity kind of got stuck in the building, right? If that happens, you've got two options, guys, right, to keep the ship moving. Because if you're a value add specialist, you don't want to just do one and done and wait to save up money again, and 2 years later you do another one. That's not what it is. You want to keep your same contractors and your same property managers and Jason. You want to keep them working for you continuously, right? So you want a continuous string of these. So you keep the same team together, right? Everybody makes money together. Everybody gets to eat. So you got to keep it back, which is anywhere from like 110,000 to 150,000. They'll also get the profits out, in this case 35,000, right? So they'll be up to 185,000, and this is after you've paid your lawyers and your real estate agents, etc. Guys, that's your net profit, including closing costs, right? So now you're up to 185,000. Great. You do another one like this, maybe on Highland, which you're going to see next, maybe on Gladstone, and you're going to do another one, and that one you refinance and you hold on to it, because that refi, even though it's two houses later, that gets you your original money back, that 150,000 or whatever it was, right? So in essence, what you do is you sell the first one, keep the second one, sell the third one, keep the fourth one, sell the fifth one, keep the sixth one. So every year, if you're doing two, you're building up one property per year into your portfolio, right? Right, Jason? I mean, I think that's what most serious people are doing right now, so that they don't have to pump more and more money into the value add strategy.
Yeah, it's a strong, steady way to do it for sure.
Right. Is anybody getting away with just doing one after one after one? I mean, somebody with deeper pockets, I guess, right?
Right. Yeah. Yeah. I mean, if you can put more down, then you can pull off that kind of chain for sure.
Yeah. Yeah. If somebody's got a line of credit or something too, they can use their own,
Yep.
especially
Absolutely.
with the cash flow coming in. Jason, interestingly, also found I wouldn't have thought of doing this, and I'm gonna leave it to you again. But Jason's arguing that even in this market, the market's gotten so soft that if you're like, hey man, I don't feel comfortable doing renovations, I've never invested before, Jason's saying no problem, buy the resultant house plus ADU.
Right.
You're not going to get that equity bump. That's going to go to somebody else. Somebody else is going to get that 34,000, like on that previous property, right? But Jason, why don't you explain here? Like I noticed, for example, certain people, they love the 1% rule. They want to see that every month they're grossing enough rent that it's equivalent to 1% of the purchase price. You are extremely close to that on this property, and I don't see that often. Your
Right.
gross rent
Yep.
is really close to 1% a month of the purchase price, right? Oh boy, come on, Rhys. 36, so $3,000 a month.
Right. Right.
I mean,
Yep.
that's super close, dude. Super
Yep.
close. So maybe if you go through the numbers here and why you chose this one.
Yeah. So this is basically somebody who's kind of done the burst strategy, and the way it's a buyer's market right now, you can do a plug and play purchase, so to speak. Acquire the property for 350,000 between the top and bottom units, for probably 1,800 top, 1,200 bottom, plus gives us the 36,000 annual rental income and cash flowing around $900 a month.
Yeah.
Yeah,
That's with a property manager. That's with a vacancy allowance. That's with assuming 5% maintenance.
Maintenance for sure. Yep.
That's good. So the reality, guys, is because the rent is so high, you're actually probably going to get more than 1,000 a month, because vacancy management and maintenance are all percentages of your gross rent. So if you're getting a huge gross rent off of basically a small house, those numbers, those expenses are going to show higher. But the reality is, look how tiny that house is. Like your cost of maintenance is going to be lower because it's a smaller home. Does that make sense? So that 900 plus, I mean, my business gut tells me that's going to be $1,000 a month in cash flow. The reality of it.
Yep.
Yeah. And guys, if you don't know what coverage ratio is, cap rate, by the way, going cap rate in Windsor that everybody's happy with is 6% right now. So to be at 7.6%, you're way, way ahead. I'm not a huge fan of cap rate on smaller properties, but it's still a decent rule of thumb. Coverage ratio. If you don't know what that is, guys, that's basically the lenders. They want to know that you can cover the mortgage. You can pay the mortgage. So the banks like coverage ratios of 1.15 on these, and you're at 1.68. Yeah, you're
Comfortable.
okay with the banks. The banks are going to be happy to lend you the money on this place.
For sure.
Anything further, buddy?
No, I think that pretty much sums it up. And these properties are out there. You just have to know where to find them.
Yeah. So this is just a snippet, guys. Jason's going to end up doing an ongoing video series called Deal of the Week. They're just going to be 5 minutes or less. The videos. He's going to do them on Loom and just show you guys over and over again the opportunities that are down here. And yeah, just remember, it's not just about me and Jason. It's about the fact that we are all investors on the real estate team. And I got been investing for almost 30 years. Greg's been investing over 30 years. And yeah, and I know, yeah, I'm 50 years old, guys. Do the math. Started when I was 22. Started when I was 22, so I'm exaggerating a little bit. But anyway, we've got the right tradespeople and contractors and everything else so that you guys are good and safe in investing down here with us. Jason, thank you for joining us.
Thanks for having me, Rhys.
Yeah, so guys, look out for Jason's series coming up, Deal of the Week. It'll all be value add strategy in Windsor, Ontario, and it'll be on this channel. So subscribe below. Talk to you guys soon.